Hello and welcome to this weekly market recap for the week ending Wednesday, November 12th, 2025. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. It's a pleasure to be back with all of you again this week. Looks like we're finally going to get an end to the government shutdown. We have a vote this evening at 7 p.m. Eastern. The House will be voting. If they pass it, then it will move to the White House. We'll get President Trump signing it into law. And we will move on finally. Won't have to hear any more about the shutdowns. That's good news. I think the market will probably be happy not to hear and have to deal with that news going forward. This past week, it was a little choppy. We saw the NASDAQ pulling back a little bit, money rotating into some other areas. I think it's pretty healthy what's been taking place. But let's take a look at exactly what happened over the course of the last week. So transports leading again, gaining more than 2%. I'll show you in a second a chart, but transports going right up against some key resistance at about 16,500. We backed off of that today. I think that'll be important if we can get through there. Dow Jones Industrial Average up next, gaining 2%, moving to another all-time high, pushing through 48,000 for the first time this past week. That was good news, and I think on its way to 53,000. I'll show you the measurement there. S&P 400 mid-cap index gaining more than 1%. S&P 500 up about 0.8%. And then we had the NASDAQ and the small-cap Russell 2000 both lagging, both dropping just a little bit fractionally over the course of last week. Moving on to the sectors, healthcare leading, gaining almost 5% last week, a huge week for healthcare. And many of the more defensive or value-oriented areas of the market. So we're seeing a little bit of catch-up there, which isn't a bad thing. Materials, energy, also financials gaining more than 2% last week. I wanted to mention that in particular because financials love the month of November. So we're starting to see some of that relative outperformance in financials for sure. Now you can see the S&P 500 down here. There were four groups lagging. All four were aggressive areas in the market. So industrials just barely under the S&P 500, but communication services, technology, and especially consumer discretionary, all lagging that key benchmark S&P. All right, the Dow. So let me show you why I think this is so important. The Dow Jones, and I remember talking about this a few months back, we broke out of this inverse head and shoulder pattern above 45,000. And when we did that, it then tacked on a measurement. The measurement you can calculate by going from the neckline down to the inverse head. In this case, 45,000 down to 37,000. That gives us an 8,000 measurement up to 53,000. So we're now up over 48,000, which is nice. I think we got more room, though, to the upside, and I expect the Dow is going to make it. Couple things in case you don't know. The Dow Jones Industrial Average is not like the S&P and the NASDAQ. It's not a market cap weighted index. It is basically weighted on price. So the higher price stocks have more exposure within the Dow Jones. So Goldman Sachs 10.2%, Caterpillar 7.4%, Microsoft 6.7%. Now I'm going to show you the components over here. And I've got them in order of price so that you can just see Goldman Sachs, Caterpillar, Microsoft. And if we flip it and look at the ones that are least impacted, the Dow Jones least impacted by Verizon, Nike, Coca-Cola. And if we come back over here and show you all of the components right down here at the bottom, you can see the smallest percentages represented within the Dow: Verizon, Nike, Coca-Cola. So if you didn't already know, the Dow Jones is driven more by the higher price stocks in the Dow rather than the higher market cap. And this can be shown again if I go in here and show you the last price. Over here in the far right-hand column, I've got market cap. So you can see Microsoft, 3.76 trillion market cap. Goldman Sachs, 250 billion. So it's less than 1/10 of Microsoft in terms of market cap, but it's about 60% higher in terms of its weighting in the Dow. So just wanted to point that out. The Dow Jones loves the fourth quarter, partly because the Dow Jones largest sector representation is financials. Financials also love the fourth quarter. Check out the Dow Jones and look at the final 3 months of the year. This is going back over the last 13 years. The average gain on the Dow in the fourth quarter is 6.4%. If you look at the other quarters, July through September, only 1.8%. April, May, and June, that's only 2.2%. And January, February, March, only 0.7. So 6.4, easily the most bullish period historically, at least throughout this secular bull market on the Dow. If we look at the financials, you're going to see the same thing. Look at the fourth quarter. Financials average gaining 8.5% in the fourth quarter. And remember, financials are about 26% of the Dow Jones. Looking at the other quarters, though, 2.6% in the third quarter, 2.6% in the second quarter, and 0.7% in the first quarter. So again, 8.5% in the fourth quarter. That's been the average return. So seasonally, financials tend to do really well, which helps lift the Dow, and we're seeing it again in 2025. Just want to make sure everybody is aware of that. S&P 500, beautiful test last Friday of the 50-day moving average. We printed a hammer. We bounced off of it. We've moved back through the 20-day moving average. So this is starting to give us more of a look of either another breakout coming where we're trending higher or possibly just sideways consolidation. It will depend whether or not we can break out above the recent high or if we fall back beneath that 20-day moving average. NASDAQ 100 also making huge move to the upside after going down testing that 50-day moving average on Friday of last week. Love that hammer that printed, gapped up on Monday morning. Like the S&P 500, we're trading back above that 20-day. Let's see if this leads to another all-time high. Small caps, IWM, I think this is much more definitive in terms of price support. There's no doubt in my mind right now, IWM key price support is down just below 238. If that level gives way to the downside, small caps could be in a little bit more trouble in the near term, maybe more in the intermediate term. I think as long as we hold that level, if we can get back up, push through the 20-day moving average, I think that opens the door possibly for yet another all-time high on small caps this quarter. Transports, here was the chart I was talking about earlier, 16.5. You see that double top over in July? We tested it again today and then backed off of it. So once again, sellers came in, but we are trending up pretty nicely above that 20-day moving average. Do we bounce if we go down to that 20-day moving average? I think that's going to be the key. We've got a clear breakout, 16.5 that we're watching to the upside, and then to the downside, watch that rising 20-day. All right, healthcare, big week last week in healthcare. Look at the last 3 days. Huge move, huge rally. And it was really led by multiple industry groups within healthcare, but both biotechs and medical equipment companies breaking out. And I'll show you those charts in just a second. But if you go back over the course of last year, you can see 148 had been the high in the XLV. After the Thursday and Friday, made an easy break above that level, closing up not too far from 153 on Friday. So healthcare getting a lot of money rotating into that space. You need to be aware of that. This is a 5-year chart of the XLV, healthcare ETF. Notice for a couple of years, all of these moves up between about 128 and 135. I mean, I count multiple. I mean, this was 6 different periods where we moved up into this area and could not sustain it, coming back down out of the zone. Finally, at the end of 2023, we broke out of that range, broke above it, and now notice that the weakness that we saw over the summer in 2025 came down into this same range, but it held it. And now we're rallying back. 155 was the high from about 15 months ago. That's where the bulls want to clear. That's the level. Want to get through 155, maybe even 156. If we can get through that, I think we've got even potentially more upside in healthcare stocks. Here's your biotech breakout. We actually saw a breakout back at the beginning of October, sideways consolidation, broke out again, a test of support and the 20-day moving average. And recently, Last few days, another big breakout in the biotech space. AMGN, which I'll show you a chart in just a few minutes. AMGN, which had been kind of underperforming the entire group while it was sideways consolidating, just broke out to an all-time high. So AMGN should be on your radar. But again, we'll look at that chart in a minute. Medical equipment stocks. Today's high or today's close over 3,050 was the first such close since back in early March. So we came off that April low. We had a really nice move in medical equipment companies, went all the way back to 3,050 by mid-May. Since then, we have not been able to get through 3,050 until today. So this is an area of the market that you might see some continuing strength in, building upon Wednesday's breakout. Financials. So financials showed the history, the seasonality, and the fact that financials are leading the Dow Jones in this move to the upside. Here is just the absolute chart of the XLF. You can see this big move here. And then also I could go down and let's just put in here. Let's look at the XLF relative to the S&P 500. And check out November's relative strength. This is when we tend to see strong action from financials, and we are seeing it right now in its strongest month, the month of November. So can we make this breakout? If we make the breakout to a 52-week high, I think that could only add to what already is a strengthening group. Breakout, I think, could lead to even further gains in many of the component stocks in that financial area. Energy has not made a breakout, but I was looking at all of the sector charts, and I just wanted to point out over the course of the last probably 20 months or so, energy has gone up into this 92 to 95 area many, many times with no success, no breakouts beyond that level. We keep pulling back. I'm just putting it out there just to let you know, because if energy were to move up and break out above 95, it could lead to a much more significant advance. Energy, if you go back and look over the last 5-10 years, we'll go back 10. I mean, you can see the huge move off the pandemic low. We've just mostly been sideways consolidating. We were at 85 back at the end of 2022 on the XLE, and now we're at 90. We have literally gone almost nowhere for about 3.5 years. So we really need to watch this group, because if we do get a breakout after lengthy consolidation, we could continue to see a lot more movement to the upside. For those of you that are new to earnings beats, certainly welcome to the show. We certainly appreciate Stockcharts and the opportunity to present to everybody. If you go over to earningsbeats.com, we have an area where you can sign up for a free 30-day trial. You do have to provide a credit card, but before we will charge your account at the end of 30 days, we will let you know that your trial period is expiring. So if you want to check us out, go over to earningsbeats.com. Make sure you check on that. Also, if you just want to learn more about us, we have a free newsletter. No credit card required. Name and email address is all it takes. We have a Earnings Beats Digest. It's not really a big newsletter. It's 2 paragraphs and a chart. That comes out every Monday and Wednesday morning. Name and email address is all you need there. And you can join literally tens of thousands of folks that have taken us up on the EB Digest. One last thing here. I am really excited about Saturday. We have a huge event coming up Saturday, 10 a.m. Eastern. This is our fantasy stock draft. First time we've done this at Earnings Beats. If you know much about us at Earnings Beats, we put together portfolios every quarter, and we've been doing a great job over a long period of time of outperforming the S&P 500. But forget about all that, because this is a personal competition. I'm going against Grayson Rose and Julius DeKempenaar, 2 really good friends at Stockcharts. Really looking forward to it. We actually have a mystery 4th guest that is going to be picking their own fantasy stock team. This is going to be a challenge that's going to last up through the Super Bowl, up until the Super Bowl. If you want to kind of see what we go through in putting together our portfolios, and you want to hear a little bit of smack talking, because I'm sure there's going to be plenty of that. Make sure you click on this fantasy stock draft link and sign up, name and email address. Hit that submit button, and then hopefully we will see you at 10 o'clock on Saturday morning. That's 10 o'clock Eastern. Now, if you are on your mobile device, check out the QR code that's on your screen. Simply scan that QR code with your mobile device, and it will take you to a landing page where you can sign up on your mobile device. And then you can come in on your mobile device on Saturday if you'd like. But we're really looking forward to it. It's going to be so much fun. Like I said, a lot of smack talking, and we're going to see who can make the best picks. I'm kind of anxious to see where everybody's going. I'm trying to think strategy right now. Do I take some of my favorite stocks up front, or if I think that maybe those two will ignore them, maybe try to take them in later rounds. Anyway, there'll be some strategy going on. Anyhow, a couple of stocks to wrap up here on. AMGN, this was the breakout I was talking about. I mean, it's been going up, but it has consolidated now for about a year and a half. So while biotechs have been moving up and breaking out, AMGN has been consolidating until this week. And now AMGN making a breakout to all-time highs. I think this is a stock that's got potentially a lot more upside in it as we move forward. How about Eli Lilly? Lilly was in this slump for quite a while, and all of a sudden, in about the last 3-4 weeks, big move to the upside off the moving averages, breaking out to new highs. Eli Lilly, I think, looks really interesting at this level, probably looking to break out as well. How about Steris? STE. This is a company in the medical equipment area. Remember, I just talking about medical equipment stocks breaking out? Well, here's one of the stocks showing strength. AD line soaring, making a huge breakout with its recent earnings report. I think Steris is one certainly to keep an eye on as we go forward. How about Johnson & Johnson? Johnson & Johnson, look at the AD line right here. Beautiful, showing a lot of potential accumulation there, making yet another breakout today to the upside. Had been showing a lot of strength versus the pharmas. Right now, pulling back, but most of this has come during this period of consolidation. Now that we're getting a breakout in Johnson & Johnson, I think just maybe we get another move there. I'll give you a couple of financials that I think look kind of interesting here since we talked about financials as well. AXP, I talked about this one not that long ago when it broke out after its earnings, and it just continues to move to the upside. I really like American Express. This is the fourth weighted stock in the Dow. So the strength here that you're seeing, this is one of the reasons why the Dow Jones has been performing the way it has. And now I'm going to give you one that's a little riskier in the financial space. Lemonade, LMND, it's in the insurance area. It's actually an AI stock. Kind of an interesting business model, if you will. Stock broke out. It was heavily shorted, so some of this could be short covering as well. But with this breakout, I would watch this gap up at around 67.50. I think that's a key area of support on any pullback. All right, that is it for me. Again, come join us on Saturday. We're going to have so much fun. We'll be done. I promise we're going to be done before college football starts at noon on Saturday. So we'll get you out in time for that. But I think it'll be a very educational event. Learn a little bit about stock charts, also while learning about relative strength and some of the things that we favor. And I'm talking about me, Grayson, and Julius. Can't wait for the event. Hopefully, we'll see you there. Have a great week, everybody. See you next week. Happy trading.